Buenas noches, Lataro. This is Ryan with TrendLizard.com. I hope you're doing well, my man. I got your email. I'm going to take a look at 3 tickers for you. You're putting my skills to the test here. We're looking at some different things tonight. We're looking at the Chilean Peso, the 10-year yield, and then an international dividend ETF. Had to pronounce those clearly because they're all a little bit wordy, but we're going to look at them all for you, starting with the Chilean Peso, and that's what we're looking at here. So this chart is the US dollar to Chilean Peso. This data dates back to 1997, and an initial glance at this guy leaves us fairly confused. It's fairly difficult to figure out what's going on here. Big swings up, down, up. Started going a little bit more up since 2012, but no apparent 5-wave moves, no apparent 3-wave moves. So when I come into a situation like this, I look for some patterns that I can find, and then also look for some other clues, and I'll show you what I'm talking about. So this is what jumps out to me on this chart. The first up leg looks like a 5-wave move. The reversal down to the downside also looks like a 5-wave move. You have this up move in 2008. It was immediately retraced by more than 61.8%. And then later on in 2018 up to 2020, we have this nice up leg. It has been retraced by almost exactly 61.8%. So if we're in a trendy up move, we don't expect it to be retraced by more than 61.8% at any point. So we have this up leg here, and it becomes retraced by more than this amount. We have to think it is not a trendy move. So taking all of this into account, this is the initial labeling that we come up with. So it has the end of a 5th wave. We don't have the data back here. We don't know what happened. All we can do is figure out what's going on from the point that we do have data. It looks like a 5th wave. And then you have this 5-wave down, fits as an A wave. You have this big pop for a B, and then this move that retraced more than 61.8%. Got to think it's still part of the larger pullback. We call it a C wave. Then you have this advance here, looks trendy, looks like a wave 1, a second wave pullback, and then another trendy move, but then this pullback that overlaps this area here. So it would be a first, a second, and then in a smaller degree, first and second wave, assuming that the Chilean peso can find support where it has so far in 2021. If it moves any lower, this doesn't work. So let's go ahead and dive in and look a little bit closer and show you some other options as well. This looks at that advance off the 2011 low. Again, it's a first wave, a second wave, and then a smaller degree first and second wave. It works if the Chilean peso can find support where it's tested so far in 2021. If it can turn up above 805 from here, not super close, but it's been a very large pullback off of the 2020 high, then this looks like a bullish opportunity. I would like this chart. As is, I'm not so certain that this is actually what's happening. If we actually drive in and look at what's happened off the 2020 high, we see this move that looks like it's trendy to the downside itself. I'm not confident that it's going to find support where it's found support so far around 690. And again, if it continues lower, the whole concept that this is the start of a much larger 5-wave advance gets scrapped. So that's a problem. The way it's traded sideways in 2021 makes me think it wants to head lower, makes me think that the down move off of the 2020 high could be a trendy move to the downside. Overall, I'm not confident that it's at the start or in a much larger 5-wave advance. Now, if it can reverse higher and move above 805, that changes everything. It looks bullish. But here's what I do think is going on instead. And again, it's not an easy chart, and that's why it was such a challenge. But you have a second wave that was a very deep retracement of this first wave, and then you have a third and fourth and fifth wave, which makes up one large leading diagonal. And then it makes more sense when you look at the pullback. You have this pullback that's not complete. It probably fits as an A wave. You would get another B wave up and then a C wave down. Overall, the Chilean peso needs to stay above 600 to remain bullish in any light. If it moves below 600, scrap the whole thing. This would look like one big counter trend move, and you just basically have to conclude that this is not going to adhere to the Elliott Wave pattern. If it can find support where it has now, turn above 805, then everything's chipper, everything looks great, then you can buy it, you can own it, it can look higher. As is, I think it's going to head lower. I think you're going to see this pullback off the 2020 high, complete a larger 5-wave down, probably get a counter trend recovery, and then another dip down. So I think you're going to see more back and forth action and a much larger counter trend pullback over time for the Chilean peso. There's that one, Lataro. Let's move on now. We're going to take a look at the 10-year yield I've looked at this in a different light before, and what you see here is TNX, which is the SIBO 10-year U.S. Treasury yield, and then you have the U.S. Treasury 10-year yield. The blue is the TNX SIBO 10-year Treasury yield, and the red is the one you asked for. You can barely see the red. It's because they move lockstep. They're the same thing. So I just wanted to point that out because it helps us to be able to look at TNX as well, because that's something that I've analyzed in the past and posted videos about, but that just gives us kind of an extra data point to look at. Overall, obviously, the 10-year yield has been in a major downtrend since the 80s. It started out decently nice. You had this 1, 2, 3, 4, 5 wave move. Generally speaking, you had overlap between the first and the fourth wave, but that wasn't the beginning, or that wasn't the end of the overlap. Every time there's a high, it overlaps with previous price action. There is no way to label this as a clean Elliott Wave move. It's just not possible. Literally every single opportunity this guy has had to overlap, it has. So we can't label it. So basically what we're saying is it's been in a downtrend for 40 years. The only reason we would want to think that a low is in is if the latest action to the upside gives us a good reason to think that a low is in. So let's go ahead and look at the action off the 2020 low and see what we can conclude here. It does not look like a low is in to me. What you have is you had this bounce off of the March 2020 low, and then you had a pullback and some choppy price action here that looks like a B wave. Now it's been in a larger recovery since then, and it appears to be in a larger C wave advance, currently in the fourth wave of that 5-wave C wave advance. So I do expect it to continue higher for now, but I think this entire recovery is still just a counter trend move within an ongoing down move. There's nothing to indicate otherwise. Basically what we're looking for here is for this fourth wave here, it's currently a 3-wave move. We expect it to put in a low sometime soon, turn back up. Once it moves above 160, we would expect it to continue to a new high for this recovery to thereby complete a 5-wave advance for the C wave, at which point we would then look for the downtrend to continue. So on the near-term time frame, we think it's going to head higher. A move above 160 confirms it is, but in a larger scale, in the advance off the March 2020 low, this looks like a counter trend move, not the start of any major change. So it just continues on. Massive down move, choppy, hard to label, impossible to label really, but until there's some sign of change, it just has to be expected to continue lower. So there is the 10-year yield. Let's move on now to DWX. This is the Spider's S&P International Dividend ETF. It was incepted back in early 2008. It's had some big swings in its lifetime. Started out down, gave us a very nice trendy up move, headed sideways for about 10 years, and then off the 2020 low has showed more life. So the first up leg here off of that 2009 low could be a first wave or an A wave. I think it's probably an A wave. The reason being, you have this large, gigantic counter trend pullback here. It's huge. This does not look like a second wave to me. This is more the type of stuff we see from B waves, which would make this a C wave up. Whatever the case may be, it doesn't really matter to me. All I care about is when this up leg off the 2020 low is going to, if it's going to continue, and when it's going to complete. Because when it does complete, I assure you, I wouldn't want to own this guy. I think you're going to see a much larger pullback, and generally speaking, you would want to be out. So bottom line, we want to be bullish on this guy as long as this up leg off the 2020 low is going to continue, and it should be a 5-wave move before it does. So let's go ahead and zoom in and look at that action off the 2020 low. This is it. Here's that advance March up into, looks like August's high. You got a nice 5-wave first wave, a 3-wave pullback for wave 2, and we are currently in the 3rd wave advance that began back in October. Within that larger 3rd wave advance, so the blue 3rd wave advance, we still have work to do. So we have a first, a second wave, and now that 3rd wave has been in play since March. It looks like it could be getting closer to a high. When it does, we would expect a 4th wave pullback, something similar to what we saw back in the start of 2021 before price turns higher. So I think this thing has a lot of work to do still. It might become a little less direct as you get like a 4th wave pullback here, the completion of the 3rd wave, and then a larger 4th wave pullback. You're going to see more choppy price action. But overall, the trend is very much still up off the 2020 low. And until this thing gives you a very clear 5-wave advance to the upside, higher prices have to be expected. In terms of a stop level, I would use 38. It can't move below 38, needs to stay above that level. We expect that it will. As long as it does, we will expect higher prices on DWX. So that's it, Lots Row. Sorry about losing the first email. I'm not sure where that thing went. Maybe it went to my junk file. I don't know where it was. Never saw it. But anyway, I hope this is what you're looking for. Let me know if you have any questions. Have a wonderful evening. We'll talk to you soon. Bye.